Okay,
Hmm.
welcome to this episode of Real Estate Chat with Robert Eid and Johnder Perez.
Hi, all.
Amazing. So, thank you so much for those of you who have subscribed to us. We had quite a number of you subscribe over the past couple of days. So, we must be doing something right. You must be enjoying our episodes. If this is your first time watching this video, click on subscribe and join the fun. So, what we're going to be talking about today is what happens now? What do we do now? So, right now, January 24, as we're recording this, 2023, mixed sentiments about the market and where it's headed. We're seeing a huge difference in terms of the sales, how many sales are happening. I mean, sales price is obvious, what's happening with that, but the number of sales happening, even though, as per our previous episodes, January is typically a lower or slower start to the year. Year over year, we're not seeing the same activity. Mind you, we're comparing it to last year, which was headed towards the peak market, peak prices in the market. There's a bit of uncertainty of where the market is going due to a lot of factors beyond our control. So as Robert and I were throwing each other ideas for this particular episode, who knew that inflation would rise? Who knew that many of the factors that are happening in this market would have happened? And the interest rate announcement happening tomorrow will further dampen the affordability of homes. Condo assignments. Robert, you probably seeing this because we get emails from our fellow registrants. We're seeing condo assignments being offered to us at 2018 to 2019 prices. So anybody who bought in 2018, 2019, hoping to make big profit, you should watch our episode about pre-construction condos and pre-construction subdivision homes, which is, I believe, 2 or 3 episodes before this one. They're now selling at 3, 4 year ago prices. So the question on this episode that I'm going to ask Robert, because Robert is my guide to the market and yours. What situation are you currently in, and what you should do next? And we're going to be looking at 5 different scenarios, and I call them avatars. You can call them profiles. You can call them whatever you want. But basically, we're going to look at different scenarios. Are you an investor right now who's in the money? Are you an investor who could potentially lose money if you sold your home today? Are you a homeowner who wants to upsize? So buy something bigger, move out of your small space and get something bigger to live in. Are you a homeowner who wants to buy smaller? So you're right sizing, putting money into the bank, perhaps for your eventual retirement or if you're already retired. Or are you a first time buyer with 10% down? Each of these scenarios have different situations that you face, different decision making that you've got to do. And Robert's going to give us an idea of what to do next. So, Robert, let's start with, I guess, first of all, your view and your scope of this. If you're somebody who's looking to be involved in the market now, what should you be relying on? What you should be looking at, and then we'll go one by one through each of these scenarios, so that if you're watching this as our viewer, you'll be able to navigate based on Robert's advice. Robert.
Well, Johnder, you hit on what I would say are the 5 types of customers, of clients, of prospects, of people that we will run into in the course of every year. And so no year is different. It's just who's a winner, who's a medium winner, and who's a not winner in that given market. So I like to try and find what's one thing that applies all the time. And in this case, no matter who you are in those 5 categories, avatar is too modern a word for me, is what are you going to do with the money once you've got what you wanted? If you wanted to sell, what are you going to do with the money? And if you wanted to buy, we know what you're going to do with the money. You're going to give it to them, but what part of your life plan is being satisfied by making that acquisition? Like, there's always reasons to hesitate. There's always reasons to go ahead. And then there's factors that come that say, I better accelerate my plan. I better delay my plan. Oh, gee, I have the fear of missing out on this wonderful things happening. And I'm going to say that whether you're a buy-sell customer or one side only, the destination is more important than where you are now. The acquisition is more important than what you're going to dispose of. And so think of the end and then work backwards.
Interesting concept. So think of the end, work backwards, and look at it that way. And that removes emotion. I know that buying a home, for example, is an emotional decision. Investing in property should be more of a logical decision, but you'd like to think that. But then you see a lot of people who have speculated on pre-construction condos, for example, or any type of properties, thinking that they'll always go way up. So let's look at these one by one. And question is, look at the end, work backwards, and what do you plan to do with that money? So an investor who is in the money, somebody who bought well, probably either years ago or, they somehow built equity in their home, renting the property out, and is, let's say, I mean, in Toronto, it's hard to be cash flow positive, but suppose they did buy many years ago and it's been paid off many years ago, or if they bought even, within the past decade and have seen decent appreciation, decent cash flow, what should they do?
Okay, well, this is regardless of when they bought it or all those things that you outlined. It's the classic example of what are you going to do with the money? That should you do like the railroads do, is never sell anything, just refinance it and take a little money out, buy another one, or put that money in your pocket. Now you have to pay tax on it sometimes, but if you're an investor, that's part of the calculation from the very beginning. You're not going to avoid paying tax on it forever. You might postpone it, you might delay it, you might minimize it, but you're not going to get rid of it. So if you're in the money, then you have to say, can I buy something better than this? And if it's done that well for you so far, you're familiar with it, you know who the tenant is, you know where the neighborhood is, you know what the upside and downside of the neighborhood is, then maybe you want to refinance it and buy again. So I would say that if you're an investor, meaning you're not owner occupier. Okay, and that's really how I look at it. Owner occupier, not owner occupier, because if you're not occupying it, then it doesn't disrupt your life to buy or to sell. You're just acquiring an asset or disposing of an asset. So the answer to that one is probably you're going to take some money out and buy another one, because if it's a good time to sell, then you don't want to be buying. And if it's a good time, or if it's a bad time to sell, then it's a good time to be buying. So there's my answer to him.
Exactly. So you're sitting on money, you're sitting on equity. If you like your investment property and that's why you bought it first, then you refinance it, you keep it, refinance it. If you want to dispose
It's a
of it.
write-off. All the interest is an expense. It's a deduction against revenue. So it's different if you're owner occupied or not owner occupied based on just the use of money.
Absolutely. What about an investor who's going to lose money? Let's say, for example, they bought 2020, 2021, hopefully not peak 2022, but let's say that did happen. And if you were to sell today, or if you had a pre-con, you bought it, you want to assign it, but you're losing 50, 100, 200, 300,000, like the subdivision home episode that we did a couple of episodes ago. If you sold today and you lost money, how would you handle that, Robert?
Okay, well, let's say that the scenario you're talking about is someone who's just about to decide, should I complete the transaction? And then separately, I already own it. And if I wanted to dispose of it, I would lose money. That if the person bought it with making money in mind, and now all of a sudden they need twice as much money cash to buy it because of the mortgage rules have changed, because maybe it's discovered that they're not going to be a resident according to the CRI, and they got to pay extra tax, and maybe they're not going to get the HST. All kinds of things could happen that surprise them just before closing. So again, if you've made investment profits, gains in the past, you can sell that son of a gun that's not working out quite right now, and you can take that capital loss and apply it against what you already claimed as a capital gain in the past. So you've got a game, the tax game that you can play if you haven't quite done it yet. Now, you still got to find a buyer, you got to assign it. So there are many people who are looking for something that's going to close. The completion date is in 3 months, 6 months, because it's up. It's almost a tangible thing. The only thing that's uncertain is what's going to happen with the budget and the exact setup of who will be on the first board of directors, and is the budget low-balling or high-balling for what it will be in the first year. And then do you think that if you hang on to that for 2 years, 3 years, for this high interest cycle to for them to chicken out? That's what's going to happen. They're going to chicken out and find that this is not the solution. Inflation is not going to be beat by what they're doing, trying to raise the interest rates to the sky and beat the economy into the ground. Nobody wants that. It's in nobody's best interest. All the politicians are going to get thrown out if they continue doing this. So they're going to have to back off that, but they can't back off just yet. They would lose faith. So it's going to be a couple of years. And then instead of having 2%, 0% inflation, you're going to have 4 or 5% inflation. That's what it's going to be. And they're going to reflate. That's what they call it. Reflate out of some of the problems. How are they going to get rid of the government deficit? They're never going to pay off that. They might reflate so that $300 billion is not much anymore because the value of the currency has gone down. They just reflate out of it. So we will get out of this mess, but it's going to be a little bit more of a mess before we get out of it.
Interesting. So if you're taking a loss, take a loss. I mean, you have to be strategic with it. And as an investor, there will be losses, right? Whether it's realized losses or if it's paper gains or paper losses. Again, you don't realize a gain or a loss until you actually make that transaction happen. But if you're looking to reallocate, and if there's a better opportunity, then you have no option but to take that loss and move forward. I mean, the situation of the market will not always remain like this. And as Robert suggested, there will be further price gains and there will be further opportunities.
Yep.
So if you're going to take a loss now, do it, but you got to be very strategic about it. Now, what about somebody who's living in their home? They've built up some sort of equity and they want to buy a bigger home. Now, we know that the prices of homes on average have declined. Condo versus freehold, there's obviously a difference in terms of how each of them are reacting in this particular market, namely because of affordability, right? So condos remain relatively speaking, they remain affordable and lower priced than if you're getting into a freehold. But what if you are a homeowner who lives in either a condo or town, you want to buy a bigger home now? What's the opportunity there, Robert?
Okay, well, this is the contrarian classic perfect time that everybody says is terrible. And if you're looking, again, you're not trying to buy a block. You're not trying to buy 15 properties, you're trying to find one that suits your family's needs. So identify 4 or 5 neighborhoods, start watching and wait for somebody. It might be an estate sale. It might be someone who's over leveraged and it goes power sale and you can pick it up. So you're looking for someone who's an absolutely serious seller, who is not fooling around with his price, and you can solve his problem by giving him a hard cash deal with a quick closing. Now, they may not want that. So whatever they want, you give it to them. Time and money. Those are the only 2 components in a real estate transaction. Everything else relates to one or the other, and ultimately it comes down to only money. That, as the old saying goes, time is money, but actually money is time. So great time to buy, find something good, but know very much what you've got to sell at the same time. I'm going to say you do the tough thing first. And the tough thing
which in this market is?
In this case, it's selling its stuff. That if you look at what's happened so far this year, which is a very short period of time, under listing by 15, 17%, holding for 3-4 days of saying, we will be open to a preemptive offer, seems to be the best, as it was for most of the time, because you're looking for someone who wants to come in there and get your place. And so he'll bid to get it. He doesn't want to go to the date of the offer. He wants to get it. He sees that you're pricing it. He knows you're a little bit low. He's going to hit you hard and right off the beginning, and it won't be that difficult. So which one you do first depends whether you got 5 kids or no kids, how quickly you can move, how much stuff you got. This type of a move at this type of a time requires a plan. If you don't have a plan, well, don't bother. But if you can plan, then it's a great time to buy.
Exactly. So don't be emotional. Don't just fall in love, make an offer, and then try to sell your home, and you can't even sell it. That's a situation, and that's a good idea for an upcoming episode of Real Estate Chat. So we'll shoot that episode. What do you do first, and what happens if you bought and you haven't sold yet? So somebody who wants to buy a bigger home, you're likely sitting on great gains in spite of the adjustments in price recently. If you're in a condo, you know that the condo market has not dipped as much as, relatively speaking, the freehold market. I mean, of course, it depends on the neighborhood that you're in and the demand within each of those. But as Robert says, great potential and opportunity to buy right now when there's a lot of opportunities in the marketplace presenting themselves. So what about a homeowner who wants to buy smaller? Now they're living in a detached, they're living in a larger home, larger semi-detached townhouse or whatever, They want to buy smaller, so maybe they want to go out of town being out of the GTA area for us, and the context of what we're talking about, or they may want to downsize, or rather we call it right size to a condo, put the money in the bank, whatever that difference is. What should they do? How should they strategize, Robert?
Well, it's much the same. This is a financial upgrade. You're taking excess space and cashing it out. And you're going to take a different size space, and you don't need that much. So you take the difference and put it in your pocket. Financial upgrade. And no matter why you do it, that's what it is. It's not downsizing. Maybe it's right sizing, but there's nothing bad about it. It's just using your money and using your head. So this again is strategic. You don't want to move unless it's the right place to go to, unless it satisfies 80% of your dream come true list. You don't do it. And I'm going to say that in most cases, if you've lived in your house and it's in good shape, that your house will sell. Something that's been rented for a long time, that is on a busy street, it's got something negative, it's got a train track behind it, a negative thing, maybe you sell that first, because that's going to be definitely tougher. But that guy, you want to find something that makes it worth your while, because you can just stay where you are now. It's only going to get better than that. But if you can find something and solve somebody's problem, then you do it. So that's all.
Yeah. No, one of the frustrating things for any of these situations, Robert, is somebody scratching their heads and saying, "Oh, if only I had sold in February 22,
Well,
2022. If only I had sold then, I'd be sitting on this. So you know what? I should wait and see when prices will go back up again." And again, we also have an episode of this. But somebody who's stuck with that kind of thinking, and then before we go to the last scenario, which is a first-time buyer with 10% down, but somebody who could have sold during the peak, or not in the most recent, but maybe subsequently, but they kept holding back and saying, you know what, I think it's going to turn around. I think I'm going to do better. I think I'm going to do better. But now they're in this market. How do we adjust our thinking or understanding of the market to make sense of things?
Okay. As the individual principal, you got to make up your mind, man. As the sales representative, as the broker who's trying to deal with you, it's very frustrating because you're indecisive. How can I make a recommendation to someone who keeps changing their objectives? It's very difficult. So you've been doing nothing, keep doing nothing. It doesn't hurt. And as my firm belief is that you're going to see a time in 4% interest and 4%, 5% inflation when you get the same money that you got in 2022. But when you do all the math, you're not further ahead. It's just maybe that's the right time for you. So
yeah,
a ditherer, you can't do anything with a ditherer.
It's a perception thing, right? And many of if you fall into this camp and you're watching this and you're indecisive and you don't have the sense of confidence in terms of where you want to go, you've got to understand the full context of what's happening, right? As Robert said, you could either wait it out, but will you be better off? Will you stay in your, for example, if you if you could have sold, but you can't see yourself making this move because you could have had that much money, but you no longer do, will waiting for it to happen again make it any better? It could take years, it could take a long period of time. But yeah, the smart advice is do nothing. If you don't want to do anything, do nothing. That's the safest bet. But you're going to be in the same situation as you are in once things go back
no
up.
Worse. But no worse.
Could be any worse.
Any worse.
There's no way you could be any worse. Because I mean, if you looked at all of Robertson, how he mentioned all of the different scenarios, even if you had sold for less and bought for less, relatively you are better off anyway, right?
If you 2% mortgage.
Exactly, because and then things are always about how relative they are to each other. So let's look at the last scenario, which is I'm a first-time buyer with 10% down. Now I'm smacked with high interest rates and the amount of, let's say, so some of you might be watching this after 10 or 15 years of renting, and then now all of a sudden you're like, hey, you know what? I missed out, and now that I want to get into home ownership, all of a sudden these rates are ridiculous. Or some of you have just gotten newly married, or you're doing whatever, and you've been saving up that down payment. Now you've got 10% down. Property prices were not what they were before. They're at to get into a condo right now is what, 500,000-600,000 at minimum. To get into a decent freehold, you're looking at around 1.2. Some of them are lower, 800, 900, sure, depending on where you are. But now I've got that 10% down. I put it together. What do I do now, Robert?
I'm going to say two answers. The first answer is with 10% down, you've got to qualify for a mortgage for 90% of value. Now, that means you've got a darn good job and you've had it for a darn good time and you have a high credit rating. So you go to a reliable source, or a bank, wherever it is that we call it an A lender, that will give you a commitment. Now, commitment has all kinds of holes in it, but will qualify you and say that if you've bought a house at this price level and it came into the appraisal, we would qualify you for this amount of mortgage financing plus your down payment. Now you have a purchase price. You calculate what the closing costs are going to be, let's say $70,000, and you know exactly what you can do with your 10% down. Now, you are now a cash buyer because you qualify for that much of a mortgage. You have the down payment, can close the deal. So you're a cash buyer. You're what everybody wants. Now, if what you want cannot be had at the price that the qualifying institution says that you can afford, then you got to go to something else. Right now, as Johnder said, the thing that's messing with the confidence with so many people is the interest rate, and the fact that the interest rate may not be at 5.75 or whatever they're quoting it as today forever. It might be up another 0.5, and then it's going to come down 0.3, or come down 3%. Who knows what it's going to do, but it's not going to be like this. So number one situation is if you're qualified for, let's pick a number, 700,000, but what's available at 800 is really what makes you happy. You want to be able to buy an $800,000 house with payments based on 7%, that is $700,000. Then you need to make a journey into the area of creative financing, where you get the seller to help you bring the payments down by bringing down the interest rate, by him participating in the financing and maybe taking a mortgage at a very low rate or an offsetting rate. We do mortgage averaging. You got a first mortgage for this amount at 7%, and you got a second mortgage for this amount at 2%. You average them out together and it comes out to 4%. Maybe you can handle that and the payments work out. Now, the second suggestion is there's a company that's come to our attention at the office that through a mortgage broker, and their name is Ourboro, Ourboro. You can look it up. And they have an equity participation mortgage lending scheme where, number one, they will top up your down payment to 20%. Now, the important thing about going to 20% is now you avoid the CMHC fee. The CMHC is like 4%. It's a lot. They build it into the principal, but now you got to pay that back. So if you go in partnership, really is what it is. It's a joint venture with this Ourboro. Now you've got 20% down. Now you've got to go to their lender. They've got two now, CIBC and Manulife, I believe it is. Manulife's equitable trust for financing, which may be a little bit higher than what you want, but you've got the down payment borrowed with no interest cost until the end. Those people will be partners with you until you eventually sell it, whether it's in 10 years or 25 years, whatever the term of the mortgage is, that's what the partnership is for. So it's not for everybody, but it may be for you if you want to get your payments down, you want to not pay that CMHC fee. And if you think that there's something that you can do that just is a little bit out of the ordinary, equity participation mortgage is what it is. Look it up on Google. You'll find out that it happens all the time in commercial. And it may be a solution for you.
And the idea is to get into the market, right? Because the longer, and for those of you renting, I mean, not that there's anything wrong with renting. Obviously, you have to do what's right for you. But the longer you wait to get into the market, the more the chance of your being able to build up equity diminishes. And yes, some of you can counter that and say, but Johnder, you know what, Robert, prices are going down. So even if I bought today, I'd be negative in terms of the value. But keep in mind, yes, you are paying principal. Keep in mind the prices of today will not be the same as the prices of tomorrow. Have a look at Robert's very amazing graphs on UncleBobExplains.com, and you'll see that on the long run, prices will rise just because real estate is an inflationary thing. And it's going to cost more to build houses. It's going to cost more to buy land, to develop. and all of that stuff in the future. So to wrap up this episode, please, of course, subscribe if you like what you see. Click on unlike, thumbs down if you don't like what you see. But more importantly, type into the comments. Which one of these situations are you in? What would you do? What's your advice to your fellow real estate chat viewers? And what advice would you give them about what to do in 2023? But I want to go back to this quote that Robert said earlier, which is decide on the outcome or the end result, and then that's what you want. That's what you want to achieve. Work backwards from there. The importance of doing that is very paramount right now because of the fact that in a market where there's uncertainty, there still remains opportunity. And if you don't see that, then unfortunately, you're going to be waiting until everything does get better again. I mean, relatively speaking, of course, subjectively speaking. By the time that happens, you would have missed out on potential opportunities in the real estate market. Anything else you'd like to add, Robert, before we wrap up this episode?
I wish I was a philosopher like you, Johnder.
I try my best. And on that note, thank you so much for joining us on this episode of Real Estate Chat. More great content and discussions and more chatter to come in our future episodes. Thanks and bye for now.
Okie dokie.